क्या मस्त सपना था यार। मस्त सपने में मैं BMW i8 चला रहा था। एक काम करता हूँ, ऑर्डर ही कर लेता हूँ। Now has that ever happened to you? Probably not. But you would have loved to have something like that turn into a reality. And it is never wrong to dream. You should of course dream for what you want and then put work behind it. Hello and welcome to our channel. This is Fernway Runway and I'm Rahul. Today we are going to talk about the work that goes into making a dream turn into a reality. And the work that I'm going to talk about is called sinking fund. Now all of us dream about something or the other. We dream about a car, a home, a vacation, or even a mobile phone. For the purpose of this video, let's call a dream a goal. A goal is a definite target we want to achieve, and the best part is we get to set the time by when we want to achieve that goal. Now depending on what our goal is, the time to achieve that goal may vary. So for example, if you want to buy a house, it may probably take you 3 to 5 years. If you want to buy a car, it may take you 1 year. If you want to buy a phone, it may take you 6 months. So depending on what your goal is, you can decide the time that it will take to achieve that goal. Now once you have the time, we can move forward. Let's just say we want to buy that BMW i8 that we dreamt of. Now it retails for around 3 crores in India, and if I actually have a goal of buying that car within the next 3 years, I have to approximately save 1 crore every year. That would roughly translate to around 8.5 lakhs per month. So I know now for a fact how much money do I need to save or put aside every month to achieve that goal of 3 crores. Now once I have the goal in mind and I also have the plan in mind, I think I'm well set to achieve that goal. Now how do I accumulate that 8 lakhs per month for 3 years? Do I put 8 lakhs per month in a savings bank account? Do I put it in an FD? Do I put it in equity that I invest in the stock market? Or if there is any other way how I can accumulate my money. Since the time span is 3 years, it is a lot of time. So the best option for me would be to invest it in equity for the first 2 years, and for the last year or maybe even the last 6 months, I can move it from equity to debt. What this will help do is, it will help me gain exponential returns based on the equity markets, and eventually just before I need to buy the car, that is 6 months to 1 year before that, I can put it in a safer instrument like a debt fund. So instead of the car, say suppose I want to buy a phone. Let's say I want to buy a phone worth 60,000. In 6 months, that is doable. What I have to do is every month I need to save 10,000. So at the end of the 6th month, I can go and buy my phone. In this case, the time span is too short. If I put it in equity and the market crashes, at the end of 6 months, I may not have 60,000. So what do I do in this case? In this case, I need to play it a bit more safer. I would ideally park it in a liquid fund, so that even if my money appreciates at a slow pace, I know for sure that at the end of the 6th month, I have the required amount to make my purchase. In our earlier example of the car, I may probably not even have to invest 3 crores to reach the amount of 3 crores because my money gets time to appreciate and make more money by itself. So depending on what your time span or horizon is, you decide what type of investments you want to make. The term that is used for such kind of goal-based fixed costs that you're going to incur, that you're aware of already, is called a sinking fund. Although the name sounds a bit negative, but I think it is a fantastic concept. Every investment that you make should ideally be tied to a goal. That essentially means we should have a separate sinking fund for each of our goals. And each of those sinking funds will have a different investment strategy based on the time span for achievement of that goal. Now some goals may be too far-fetched. Say I want to get my 2-year-old child to a foreign university in say next 16 years. This is a far off goal and I do not even know if my child wants to do foreign education. In this case, what you can do is, instead of thinking of it as a sinking fund, you can think of it as a long-term goal-based investment itself. You can continue putting in money in the equity market, and as you start getting nearer to your goal, you can start moving that money from equity when the market is at a good position and then move it to a debt-based fund. Now, I strongly believe that goal-based investing and sinking funds are fantastic concepts that are interlinked. So take your time, think about it, think of all the dreams you want to achieve and then assign a time span to it and start your investment journey. We hope you're able to achieve all your dreams and goals, not just for yourself, but also for your family. With that, I'll see you next time. Till then, take care and see you soon.